you guys? Welcome back to my channel. Nikki here, and in today's video, I am going to be going over stock market investing versus real estate investing to see which one may be best for you, but to just chat it out with y'all. So let's get it. Alright guys, I look wild because I was, you know what, you don't care, it doesn't matter. It doesn't matter. So, I'm actually very excited about this video because I really do love real estate. And I've been wanting to kind of implement it into this channel on and off here and there. Some of you may or may not know that I am a realtor here in Orange County, California. So if you ever have any questions about real estate in general, if you're around the country and you're looking to get investment properties, I have business partners all over the country. So just reach out to me. My email is down in the description box below, and I would be beyond happy to help you. But next, I want to talk about the few things that it really boils down to, at least in my opinion, when you're looking at stock market investing versus something like real estate. So the first thing is really how passive you want this to be. How hands-off do you want your investments to be? 2, how much money do you need to control these assets or to build wealth? So how much initial capital is it that you would need? And then 3, just what the heck are your goals? What is it that you're trying to accomplish either through the stock market or through real estate? Now, I can sit here and tell you, ooh, this way is way better than this way, but to be honest with you, I am no financial expert. I'm not legally allowed, I don't think, to tell you that. I am a realtor, so I can give you advice on real estate for sure. But when it comes to both of them, it's not really black and white like that. It's not really necessarily one is better than the other. And hear me out. I want this video to really be like a friend to friend, sister to brother. I almost said a brother to brother, but that's not accurate. A sister to sister for like my 20% of females out there that are rocking with me. But this is really an open discussion type of video. So any thoughts, questions, ideas, whatever you may have, always put it down in the comments. I do my very best, and I think I'm pretty good at it. I don't know, you can let me know, of replying to every single comment. So this is friend to friend, you know, crew member to crew member. We're all in this together, bounce ideas off each other. Maybe if you have a deal you're looking at, you can leave it in the comments and we can kind of analyze it together as a fam. But you guys, let's go ahead and get into these specific investing styles, because you guys, the goal here really is for us to just grow together. Like, I want every single member of the crew to just be in a better financial place in 10, 20, 30 plus years than they are currently right now. So to do that, we have to invest. You have to invest your money. You can't be leaving it in no damn savings account, okay? That's a funeral for your moolah. That's bad news. So let's dive into the stock market and some things I really love about the stock market. So I'm gonna give you some pros and I'm gonna give you some cons, you best believe. First pro is low capital initial investment. You do not need a ton of money, literally like $1, 50 cents, 25 cents, a penny? I mean, on Robinhood, you can do fractional shares. So like, you could have $1 and invest in an Amazon. You don't really need a lot of money at all whatsoever to start investing in the stock market, as long as you're with the correct broker. 2, the dividends that you can get from stocks in the stock market are the most purest form of passive income that you can honestly get. 3, the long-term portfolio, the long-term game in the stock market, it's not really pressed for time. You know, you are working on building this portfolio up over the course of 20, 30, 40 years sometimes. So it's not really pressed for time. It's a little bit more kind of laid back, especially, and what I'm focused on here is the long-term investing strategy. Another cool thing about investing in the stock market is when you buy a share, you buy a stock, a piece of the pie of a company, you are a very crucial, critical role within that company. So it's a very cool feeling. You feel like you're a part of the business. You can, you know, phone conference in on the earnings reports. You can vote in certain, like, I don't even know, like, you get emails about, you know, the vote is coming up for so-and-so, and you like literally have no idea who the hell they are, but like you're allowed to vote for them. So that's kind of cool, I guess, if you wanted to look into that, or maybe you're just more intelligent than me and you actually know who's like in charge of every single one of your investments, but you are just a little bit more involved. You feel kind of good because you are a part of this business. Like, for example, if you go out and you buy a share or two of McDonald's, and then, you know, one night at 1 a.m. you're a little bit hungry, so you drive through and get yourself some McNuggies, you know that you're basically paying yourself because you are an investor in that that company. It's pretty cool. I think you get my point. You just feel good because you are a part of that business and you feel really special about it. And the last little pro, there's more, but I don't want this video to be like years long. But the final thing I want to mention is just the transaction time, the transaction process. You can literally buy and sell your stocks, your shares, your assets within seconds, within minutes, within the same day. I mean, it's very liquid. So the actual transitional time to buy, sell, get your money, take the money out, all that stuff is extremely quick. Now, there are some downsides to the stock market. Honestly, I don't think there's a ton, but there are a few. So one of the first ones I want to mention is just being too emotional, maybe getting obsessive about your investments in your portfolio. And as a long-term investor, checking it multiple times a day can really mess with your mind with how volatile days can be. I myself do that. I check my portfolio at least once every 30 minutes or an hour, probably, because I'm a freak like that. So I guess if you were to just invest your money, you know, lose your password or whatever, enable your dividend reinvestment and walk away for 30 years, you might be chilling. But for me, I'm very hands-on, and so it could get a little emotional. I'm pretty disciplined in the fact that, like, I don't really care what it's doing right now. I only care really what it's gonna do in 30 years from now. So I'm not too emotional, but I know it can get very emotional for people. And to kind of roll into the next concept, an idea I had about how it's kind of a con, just the fact that you can endure some huge losses in one day. Like, if you're 20 years into this and your portfolio is worth $500,000 and you lose 3% in one day, that's gonna fuss with your head, okay? That's gonna be tough. But on the same hand, you could have an increase of 3 or 4 or 5% in one day, and you may feel like euphoric and like, damn, I'm a baller, I'm a boss, and then the next day it goes away. So it kind of ties into the first one, but I just think it amplifies the longer you're in the long-term game, just because ideally your portfolio value is going up. So therefore, the volatile situations every single day, every week, year over year, are going to affect that overall pot of money in your portfolio a lot more than probably in your first few years of building up this account. And then to roll into the last one that is already basically attached to the other two is just that you could seriously lose a lot of money. And this isn't so much the overall capital returns or the day-to-day fluctuations, but this one is more specifically like if you're trying to build up an account in the stock market like short term, not even day trading. I feel like that's a whole nother league in of itself. But if you're like swing trading or you hold short term, like between 0 months to 3 years or so, and you could, you know, YOLO it out on like a freaking penny stock that like some dude on the bus told you about on his way to like a Maroon 5 concert. Does anybody go to Maroon 5 concerts? Nobody wants to go to those. But you know what I'm saying, okay? You don't want to YOLO like 10 grand. Let's say you had 10, 15 grand saved and you're like, you know what? I'm really feeling like this is the next Amazon, this is the next Tesla, this is the next Google, and you put that money into some penny stock, and then after 6 months to a year, it's worth like 2 pennies, and now you just lost all of that money. I mean, golly, I hope that doesn't happen to none of us, but it's a possibility. So, I mean, obviously every single investment has a risk. That's just part of the game, but I think if you're looking at the stock market for an investment, you need to be looking at it long term. If you're looking at the stock market as a side hustle, as I guess a gamble that some people would call, then don't call it investing, call it trading, call it what it is. But all in all, long term, I think just putting money into shares of companies, especially dividend payers, getting that passive income monthly, there's really, honestly, it's very simple. I mean, if you're gonna put that money in a savings account, you might as well put it in AT&T, Coca-Cola, Pepsi, Waste Management, there's a lot of others, and just receive those dividends and call it good. So I'm interested to know, what is your favorite part about the stock market? Why is it that you invest in the stock market? And what would your pro and cons be? Or are they kind of relative to what I was saying? So let me know down below in the comments, and let me move on to real estate. All right, you guys, so let's get to real estate, my love. I'm honestly, like, I obsess over stocks and investing, but like, I obsess over real estate and the investing side of real estate and the potential, and I'm about to fangirl over real estate. Let me tell you something real quick. Just let me throw it back to little, like, you know, 6-year-old Nikki in her little kindergarten, like, you know, what do you want to be when you grow up, like, show thing, and all these girls wearing these like tutu dresses, like, I want to be a princess, I want to be a queen. They got doctors, they got teachers. I shit you not, I put on my grandfather's, because my grandfather was a construction worker, I put on his overalls, his tool belt, his boots, his hard hat, and I went out there on the little stage and I said, I want to be a construction worker. And looking back on that, that's a little odd, but it is what it is. And I've been that little girl ever since, and I love fixing things up in homes. Me and my dad used to lay tile. We would redo bathrooms, kitchens, floors, like literally anything and everything. I love it. And so when I can get my first rental, I'm going to just be in heaven. But let's go ahead and let's talk about real estate as an investment, because people talk about it a lot, but I think a lot of people get shut off to it because they're like, oh, I don't have the money, I don't have the capital, it's too much risk, I don't know what I'm doing. And to be honest, that's fair, because I low-key feel the same way, but there are some things around it. If you currently have a real estate investment, let me know down below that you actually do have an investment in real estate. I think it would be really cool to connect with you. If you don't, leave me a comment down below and let me know where you would want to invest in. I highly recommend it within 10-15 mile radius of where you live, just because you're the expert in that area. You should know it like the back of your hand. But let me know down below, and let's get into these pros about real estate. So first things first is it's a hard, tangible asset. You can go there, you can see it, you can touch it, you can smell it, although some of these properties you do not want to be going in there and sniffing too much, I tell you that. But you get the idea. Unlike the stock market, you kind of just throw your money into the business and hope the managers of that business run it the way that you want it ran. Whatever. The second thing is contrary, what the hell is the word? Did I say that right? Contrary? Mary, so contrary. How does your garden grow? I don't think that's right, but basically, a lot of people think you need a ton of money to get into real estate, especially where I'm at in Southern California. Like, you cannot find a house that's worth it under like $300,000-$400,000. I get a little jealous about people I see in other parts of the country who are like, oh, I bought a house for $75,000, oh, $125,000. Like, if that were the case, I mean, that's sick, but honestly, it's all relative, because you buy a house somewhere else for $100,000, you have to buy 4 of those to have the same net worth as someone who buys one $400K here. So it's like, it's whatever, it's relative. Plus, if you're somewhere that you have to do that and real estate is very cheap, your portfolio is gonna be 2, 3, 4 times the size of what someone like here in California is gonna have. And then you run the risk of like more expenses possibly, and just, you know, but you really don't need a lot of money. Always talk to a mortgage professional, a loan professional. I am not one of those, but I've done enough research, I've talked to enough of them. I have enough business partners that I know the different kind of base mortgages that you can get on a home. One being the FHA loan, which is a first-time home buyer's loan. You can get anything from 3.5% to 5% down on a property. The only caveat with that is you do have to live in the property for 1 year, but I mean, just do it. You improve the property, update things, and after the year, you can rent it out and move on to the next one. Say you're not broke like me and you can afford to put 10 or 20% down, then you don't necessarily have to live in it a year. You can just renovate it and rent it out right away. So that is up to you. You can use a very small amount of money, whether it's a 3.5% to 5%. Let's just say that equals out to like $10,000 or $5,000 in some areas, and you can use that $5,000 or $10,000 to control a $100,000 or $200,000 asset. That is like, you can't do that. You can't put $10,000 into Coca-Cola and own $200,000 of it. It doesn't work like that. But in real estate, you can. And the other thing about real estate is there's private money and there's hard money. So hard money is really cool because they will usually almost fund 100%. I've seen a lot of 75s, a lot of 85s. And you guys, I'm trying to blaze through this a little bit because I don't want this video to be too long, but if you want to know more details about like hard money or the different kind of loans for investment or whatever your questions are, or any video ideas you have, please let me know down below. I'm always researching and trying to find out good content ideas that you guys would like to watch, so always please let me know. But a lot of these hard monies, they'll fund the entire thing, especially like on a fix and flip. Say you find a property, it's under market value by $60,000. The hard money loan guy, he's like, okay, yeah, we'll fund it 100% with the repair costs, whatever. Cool. You buy the property, you repair the property, you refinance it at a bank, you could rent it out at that point, or you just sell it, you pay back the loan, and you get a little bit of equity out of the property. Although hard money loans do have a very high interest rate, but whatever, we're not getting into that. But the moral of the story here is that there are a ton of ways to get started in real estate. And I highly suggest you just start to educate yourself in that because it is very, very rewarding. So a next pro I want to talk about real quick is just the fact that the market of real estate is a lot less volatile than the day-to-day of the stock market. Your home is not going to lose 20% in one day. Your house is not going to gain 20% in one day. It's a very much more long-term kind of appreciation. And yes, we can have housing crashes, obviously, but just recently the way things are going, it just fluctuates like this. It doesn't necessarily go like this. so let's just move on to the next pro. I guess this could be a con depending on who you are, but a pro for me is that you are extremely more hands-on. You can go in, you can paint things, you can fix the carpet, it's yours. You own it, you can renovate it, you can do whatever you want. Obviously be smart about it, but you're extremely hands-on. You pick the tenants, you run the credit checks. I mean, I guess I'm saying it like kind of from a realtor's perspective. You could have your agent do this, obviously, like run through tenant applications and stuff. But the concept here is that you are extremely hands-on. And like I said, that could be a pro for you or a con. The next thing is just the hunt of the deal. You gotta be quick in real estate. You gotta be very fast. You gotta find the right deal. It's gotta be under market value. The numbers have to make sense, but the hunt is fun. And then the last pro is the fact that your debt of your loan, whatever's left after your down payment, is essentially going to be paid by other people. You're not necessarily paying off what you owe. Other people are doing that for you. You know, I have yet to find somebody who wants to pay me $2,000 a month to buy Coca-Cola for me. It just doesn't make sense. It doesn't work in the stock market, but in real estate, that's how it works. So a few cons of real estate, because there are, and the cons are basically directly related to the pros. The first one is it's stressful, especially when you start to build out your portfolio. You gotta deal with a lot of shit. So it can be extremely stressful. Another thing are just tenants. Obviously you want to credit check them and run them through applications and stuff to make sure you're getting A1 tenants. But if you don't or whatever, I mean in times like Corona or whatever, you might have vacancies, missed payments, like you got some stress also now from tenants within the properties. Another kind of con would be there's usually a team involved with your real estate investment. So there's you as the investor, you're gonna have an agent, you're probably gonna have a mortgage officer, you're gonna have a contractor, you're gonna have a lot of pieces to this puzzle. And so the communication needs to be on point and everyone's gotta be like one well-oiled machine or a lot could go wrong. You know, when you're investing in the stock market, it's literally you and your linked bank account, that's your phone, and that's it. And then the last two cons I would say, one is timing. Like you can't move quick in real estate. I mean, you can if you're buying something all cash, which if you are, you're not even watching this video. I mean, it usually takes 30, 60 days of escrow to close on the property. You got the walkthroughs, things can come up, you can fall out. I mean, it's just, there's a lot. Not only that to close on the property, but to find a property. You're not the only investor in town. I mean, there's a lot. To be honest with you, a lot of great deals don't even get to the market. They don't even make it out to the public because investors with their solid team, with their connections, are already taking them off. They're already finding the really good deals. So that kind of is an adjustment period and that can kind of like hurt you because if you're not quick with it and you don't know what you need, you don't even know what you don't know, you're gonna miss out on really good deals because they're not even gonna make it in front of your face. And then also the expenses. You are going to have to pay for the broken roof. You're gonna have to pay for the busted pipe. You might have to do the lawn work, maybe pool work. I mean, depending on how you work it out, but you are going to have way more expenses involved with real estate, rental income, asset income flow, and properties. Damn, that was a lot. Than you are in the stock market. You don't have to worry about expenses. The company does that. You just invest the money and then they do their thing. But in real estate, you have to have all of that sorted out and you are the one going to be paying those problems. It's gonna come out of your pocket. So in addition to basically whichever one may fit you better, the returns on both of these investments are very good. The average rate of return annually in the stock market is 6 to 10%. The average annual return of a real estate market is 8 to 12%. But if you wanted to combine those two and invest in a REIT, a real estate investment trust like Realty, they usually average around 11 to 12% every single year. So there is that. Ultimately, the returns on both on average every year are good. And you may be thinking, well, 6 to 10% in the stock market versus 8 to 12 in real estate is not the same. No, but the thing with real estate is you have to have the perfect deal and the numbers have to make sense because you're gonna have expenses. You're gonna have to pay real estate agents. You're gonna have to pay contractors. You got mortgage fees. You got reno fees. You got expense fees. So there's fees that are going to add up, whereas the stock market, not really all that's going on. So yeah, it seems better and brighter and the grass is greener on the real estate side, but not necessarily. All in all, you guys, it comes down to your preference. It comes down to not just your preference, but the deal itself. You can get slapped silly if you buy a bad deal in real estate, if you get in at a bad time in the market, but overall in the market, it's very easy to average cost your way down. Whereas real estate, your purchase price is your purchase price. You can always refinance it, whatever. But if your deal is bad, if you get a bad deal, either way, you most likely will get slapped. Like I said, I just want us to grow together. If you are not subscribed, please do me a favor, hit the NB in the bottom corner or that red subscribe button. Join the crew, y'all. I post 2 videos a week on this channel, all about money, stocks, investing, finance, side hustles, just making money, having a good ass time. So if you're into that, or if you like hanging out with me, please consider subscribing. You guys already know what to do with that thumbs up button. Your girl really appreciates that. You guys know. You know it helps us. And like always, you guys, you made it this far. You are the real MVP. One of y'all called me out that I didn't give you kisses, so I could swear I give you kisses in every video, but you guys are real MVP. Come here, you know I love you. And like always, you guys, enjoy the journey, whatever your journey is, and always remember to do what sets your hearts on fire. And I better see y'all in my next video. Bye, guys.